but there are certain regulatory constraints which we've been saying for the last 15 years, that once those regulatory constraints like SLR, CRR, holding company, taxation, all of those. So some of those have been sorted out, some more need to be sorted out. When they're sorted out, I will be the first one to come back and tell you now it's sorted out. At this point in time, there is nothing on the table.
Yesterday, Supreme Court passed a landmark judgment against coal and power sector, which could impact them in a significant way. And banks, especially PSU banks, overall have around 5 lakh crore exposure to these two sectors. Do you think that could further worsen asset quality going forward?
This judgment would be good because large portion of the coal mines are not operational. Some of them that are operational, I'm sure they will be able to work out an appropriate and correct solution. So in the long run, this is good. In the short run, I think it should not translate into such dire consequences, because not all of them have had problems. So this is consequent to a public interest litigation. I don't think that scenario will arise.
Mainly on the macro front, a lot has changed while we have a stable government at the center, and we also have the sentiments that are improving. So do you think that the growth prospects for India are looking up, and could we clock in a growth of maybe 5.5 to 6% this fiscal?
I think so. I think a lot of good things have happened, as you already enumerated, that we have a stable government. They have worked on various issues which like policy paralysis, better policies, better coordination, unclogging the projects, and you are seeing the effects, and at the same time they have better coordination with the Reserve Bank of India. So on a combined basis, I think you're seeing an uptick in the GDP. I think inflation has come to some control, could be better, and the prospects in the, I'd say this year around the 5.5 or thereabouts is very feasible. And then depending upon the policies that they form, linked to what they've already said, we could do 6 thereafter and maybe 7+ thereafter.
Okay, and as far as inflation is concerned, it clearly is the biggest risk to growth right now. And when we last met, you did tell me that you agree with Governor Rajan's stance of keeping rates high at least for now. So, but do you think that his target of reaching 6% CPI inflation by January 2016 is a bit aggressive and it could harm growth? And should we brace ourselves for higher interest rate regime in the next year also?
You're taking me into very slippery territory. No, see, the point is like this. If you look at inflation dispassionately, what he had said is 8%, we came to the 8%. In fact, we're slightly below the 8%. CPI, 8%, WPI, 6%, slightly below. The only joker in the pack has been food inflation. But the benefit that will come now is much lower fuel. So they are expecting that the food inflation, which normally, I don't know why, always around this time of the year, tomatoes go through the roof, onions go through the roof, all of that, and then all of a sudden, first quarter, they turn all right. So they're expecting that that should come under control. If oil price remains where it is, and if, as expected, the food inflation comes down, then fiscal deficit will also come down, which creates a very fertile environment for a reduction in interest rate. Whether it's 6 months or 12 months, I'll leave it to better persons than me.
You have really done a great job by bringing this
now
down
you
from
want me
scratch.
To go?
No, from scratch to where it is today is the best in the business today.
Yeah.
But what lies ahead for HDFC Bank once Mr. Puri decides to move on?
Are the systems in HDFC Bank robust? Yes. Is there tremendous amount of delegation? Yes. Do we have an excellent workforce? Yes. Are there internal candidates for my job? Yes. Are there external candidates for my job? Yes. Am I planning to leave at the moment? No. Is there any regulation that tells me to? No. Is there a recommendation? Yes.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.